Welcome to Wavelengths, a podcast with Amphenol Broadband Solutions.
Hey, what's going on, y'all? It's Daniel Litwin, the voice of B2B, and welcome to another episode of Wavelengths, an Amphenol Broadband Solutions podcast. Again, I'm your host, Daniel Litwin. It's great to be here in the ABS hot seat. Per usual, we are talking shop on the biggest trends, timely news, technologies, market movers, and talking to the leaders and influencers that are shaping the larger world of connectivity and more specifically the broadband industry. So we've got a chock full episode here for y'all today. It's going to be a 2025 year in review. So a lot of little subtopics. We're going to be going wide with thin today to cover quite a bit. But this should hopefully give y'all a nice point of reflection for the major trends, technologies, and changes that are shaping strategic decision-making in the larger broadband industry. And we've got a great guest here to contextualize all this for us and, really get us into the meat here of what all went down in 2025. Before we get in to the main conversation points here, I want to make sure that you're all caught up on previous episodes of the podcast. So, folks, make sure you're heading to our website, amphenolbroadband.com. Again, that's amphenolbroadband.com. There you'll find previous episodes of Wavelengths. You'll find other resources and content to dig into, whether it's research or whether it's deep dives into major trends in the industry. You'll also find more information on our solutions and services there, of course. But also make sure you're subscribing on Apple Podcasts and Spotify. So just hit that subscribe button on your platform of choice and dive back into our catalog of content and turn those notifications on so you never miss out on a new drop. All right, team, let's dig in. A lot to cover again. So today's topic is a 2025 broadband year in review. So we're approaching the end of the year, 2025. The century is a quarter of the way through. Crazy. And broadband in the U.S. doesn't look the way it did even just 12 months ago. Rapidly changing industry with a lot of new table stakes setting up the next 25 years. So we've seen things like fiber and fixed wireless eating into cable's dominance, and that's really solidifying in 2025. BEAD funding, which we've talked on quite a bit for the last few years here on the podcast, has been rewritten mid-flight. Spectrum has changed hands in multi-billion-dollar chunks. Satellites are suddenly a real option for more people, more competition in this side of the connectivity world. Meanwhile, we've got a new class of BAAS, Broadband-as-a-Service models emerging and beginning to change the landscape of connectivity solutions, right? Treating connectivity less like a one-off construction project and more like a long-term utility and revenue stream. So on this episode of Wavelengths, again, we're doing that year in review, but we're doing this through the eyes of someone who's been building this future, not just watching it from the sidelines. We're going to be talking on how the competitive map shifted between fiber, fixed wireless, and cable this year, and what that means for builders and ISPs. We're going to talk on some of the BEAD 2025 rule changes, the upgrade race on the cable side, how that's impacting the broadband industry, and where fiber still has the structural edge. We're going to talk where satellites and 5G kind of fit into this evolving ecosystem. And finally, we will touch on Broadband-as-a-Service. We're actually going to open with some of that conversation, which is our guest's real area of interest here as of late, and get his thoughts on some of the service models that are changing in the industry. So our guest for today, and I'm pleased to welcome him here to Wavelengths, is Alex Rozek. He is the founder and CEO of Mac Mountain. And Alex has been investing in and launching fiber broadband providers for years now. So he's been in that builder role for a while. He's got the experience. He also, has served on the board of other major players in the industry. He's previously co-led Boss in Omaha, public holdings company with businesses spanning broadband and many other layers. So my man is coming here to the podcast with a lot of experience, a lot of hands-on, building knowledge here in the broadband industry, and I'm excited to get his takes on a 2025 broadband year in review. So, Alex, welcome to the podcast. It's good to have you here. How you doing today?
Doing great. Thanks for having me.
Absolutely, man. It's a pleasure getting to pick your brain here and get your insights on what all has changed this year and how that sets us up for next year and beyond. Before we dig in any deeper, why don't you give our audience just a bit more detail here, elevator pitch on where you're coming from experience-wise in the broadband industry and how that's coloring your perspective today.
Yeah, thanks. Happy to do that. I've spent a number of years in a number of different roles, both as a passive investor in public securities that focus on telecommunications or broadband businesses and of various types, and then also actually owning and operating businesses, as you mentioned before, both in my prior role as co-CEO, co-founder for a decade of a company called Boston Omaha, which had a number of different operating subsidiaries. And then for the last couple of years, as a founder and operator at Mac Mountain, which is a private business focused just on broadband. So my evolution has kind of come from seeing the business from a number of different angles, and it's an interesting topic to talk about where it is today and how it might have been different from the past. But I can firmly say that it's never been more exciting than it is right now, and I think the outlook going forward is very attractive for both investment and opportunities all over the place. So happy to start anywhere you like, but that's my background.
Awesome. So there you go, folks. That's who we're tapping for insights today. So thank you, Alex, for that context. All right, let's get the high-level hot takes here out of the way. Again, you've helped found and finance multiple fiber ISPs. Now with Mac Mountain, you're building this new partnership model for broadband. So you're continuously in this builder role at the forefront of the industry. You know what's going down. You know, and you feel the changes very, close to home. So I wanted to get your thoughts. When you look back at 2025, what would you say is the headline for the broadband industry, right? What's your main hot take of change, evolution, maturation, whatever, that really defined the broadband industry's growth and evolution in 2025?
Boy, there's so many. It's hard to pick one. There are. I put it into three different buckets. Let's first talk about financing. So, we can agree that this is a heavy CapEx business. It takes a lot of money to go out there and build networks, especially if you want to, and that doesn't matter whether they're satellite networks or they're fixed wireless networks or you're upgrading cable or you're building fiber. It takes a lot of capital initially to get into that business. So I would say, on the financing side, obviously huge changes that are continuing in terms of how these deals are structured, what the market is for it, both in the public and the private side. I think in the last year, you've definitely seen an uptake in sort of the opportunity to finance through tax-free revenue bonds, different municipal network sort of builds. You've seen entrants who have come in through private financing, the private financing market and private credit, really pushing hard into builds in all kinds of different places, acquisitions of different companies that are doing fiber broadband. And of course, it's hard to ignore the amount of capital that's going into, very interesting business models like SpaceX and Starlink. Obviously, a lot of capital to go put thousands of low Earth orbit satellites around the Earth. And obviously not just, and that's a technology feature as well as financing, but it takes a lot of money to do that. And it's producing some great results. And I'd also say, very interesting, it's not just Starlink anymore. It's Amazon's getting into the game, and there's a lot of other players getting into the game. So I would say on the financing side, very interesting that there seems to be no shortage of capital available for telecommunication infrastructure projects, which is very interesting. And of course, you need capital because that's how it takes capital to build these projects. On the technology side, that bleeds sort of in, I think, one other financing technology side, you can say that the most amount of capital that everybody's talking about, of course, is BEAD. Some very big changes just in the last year on how the largest government financing for telecommunication is being done. Obviously, I don't need to cover that. Everybody that's watching this is probably aware of how BEAD was different last year than it is this year, and how more technologies are available for that, and those awards are starting to come out. And And now some other things that I think are maybe not talked about as much, but in hindsight, and for people really following the industry, are going to have a very big impact, maybe not yet totally understood. The more and more that we've been in the business of building fiber to homes, it's increasingly that all data connection to the end user, which is very different. Cord cutting has been a conversation piece now for years and years, and subscriber growth and net adds and from either one medium to another as you get data only packages going in there. Streaming is obviously such a big idea. And one thing that I don't hear people talk about as much, but I think is very interesting is, if you look at the largest contributor to the cost of the traditional cable package was the cost per subscriber of ESPN and the affiliated Disney channels that came with that. And if you kind of look at, where the battle lines were drawn between the owners of the content and the distributors of the content traditionally, the cable companies and then the media companies, there was always that battle line seemed to be drawn around live sports. And it was, just this year, something that had been highly anticipated was ESPN came out with its streaming only package. And the reason why I mentioned that is because, from my experience, one of the biggest sort of behavioral gating items for people when you're trying to get them to adopt an all data package, fiber to the home, where you don't have the traditional triple play or double play, is you just get people saying, well, this is awesome. I love having a gig speed or faster, but how do I get my television? Believe it or not, that's a very common question from customers when they get an all data connection. And we spent a lot of time thinking about how to have a really happy, a very delighted broadband subscriber. And it still is, that you got to get them to a point where they feel very comfortable to click a button and turn on their television and watch their game. Their sports is obviously one of the biggest drivers for live television. Obviously Netflix and Disney Plus and all the other shows that are on there through different streaming services are a big deal too. But I think when we look back at an inflection point of, the wholesale retail model on streaming, that ESPN going as a direct streaming service is going to be a really interesting point to see where the adoption curves go on streaming only services and how that drives data only packages going forward. And I'll be really interesting to see, what happens with those numbers. So that happening this year, I think, was a big one too, on the content that people consume over their internet connections. So I would say, content, financing, the technology, very big year and certainly very exciting and lots more to come for sure.
Definitely. We're going to pull a few of those threads here with our follow-ups, but you've laid out already some, key indicators here that 2025 was a nice kind of capstone over, trends we've seen manifesting over the last several years, really kind of, securing their roots, whether it's, the need for connectivity solutions to handle high bandwidth usage, right? Like you said, way more streaming, way more people streaming, higher quality content being streamed. Connectivity has to handle that, and it has to handle the constantly increasing size and quality of this content. That alone is something that, we've been seeing in the works for years, but I think really starting to feel the consequences of that evolution this year. I want to pull at a few specific threads here with you too. Why don't we start actually with your service model innovations that you've been, advocating for as a thought leader in your industry as a major shift in how connectivity is even offered as a service model. So this is the Broadband-as-a-Service idea, right? So this is a lane that I know Mac Mountain has been pushing on, right? A new way to finance and operate networks. In 2025 saw more formalization around these BAAS models and public programs and formalization of guidance, right? Essentially treating broadband like a recurring utility style managed service with clear performance guarantees for communities. So I wanted to get your thoughts here on the origin story or the thesis of BAAS and why you see it as such a key component of a 2025 year in review, right? What problem is BAAS trying to even solve for, and why do you see it as such a promising model for service?
That's a great question. So I'll give you my answer from my lived experience, and I'm talking to you right now from my office in my home where I work in Woodstock, Vermont. So I lived for 14 years in Boston. I moved here in 2018, and when I moved here, we had DSL. So I got a solid 1.5 meg connection over copper phone lines, and I could tell you that when I would try to open my mail, I just watched the little wheel go around, and I remember saying, I can't work here. I mean, I can't literally even answer emails, and there is no cell service here. So I would go down to the library, and then I'd have to walk out of the library when we were here to take phone calls. Obviously, you can't do that in the library. Shortly after, we got fiber internet here, and it was municipally owned. So 31 towns in Vermont got together, formed their own municipal network. And what's really interesting about it was that they formed a municipal entity that had no employees and contracted 100% for all the design, the build, the operation, the sales, and even the financing with third parties. In one case, it was one third party. And I watched that firsthand. I didn't just watch it, but because it was around the same time, my last business, when we were really heavily getting into the broadband business, I wanted to learn, how was it possible that out here where I live in Vermont, it was something on the order of about $30,000 to build a mile of fiber. And you had on average maybe 5 homes per mile. So you had about a $6,000 per home passing cost, which was, probably 3 times more than anything that we would look at on our traditional builds wherever we were looking to build or to acquire builders who are building around that in different parts of the country. So I was wondering, how is it possible that they could make the economics of that work? And I actually joined the governing board of the network, and for almost 3 years I served as a representative from my town to the governing board of the municipal network here. And what I learned was that the secret, if you will, of what they discovered was tax-free revenue bonds. They were able to, because they structured it that way, where all the operations were entirely separate from the physical assets, they were able to finance themselves at rates that a private company could not do. So they were able to finance at a much lower interest cost. That lower interest cost was better for the borrower, which was the municipality. It ended up being very good for the investors because the effective yield on the securities that they purchased was in some cases even better than what they could get with a similar risk profile in fully taxed bonds. And they issued over some period of time, over $70 million to build this network. And today that network is something like 30,000 passings and about 10,000 subscribers and profitable. And all of that done where the assets were separated from the operations. And that model can be replicated. As a matter of fact, it's a very interesting model for people who've watched the industry. The asset-backed securitization component of telecommunications has really taken off. There's a number of businesses that have, large and small, that are taking advantage of asset-backed securitizations and more attractive ways to finance. And of course, the lower you can get your finance costs on infrastructure projects, the more you can build the infrastructure, you can put the money into the ground. I've happened to benefited from having this experience in some other business models. I sit on the board of a company called Sky Harbor. Sky Harbor builds airplane hangars, and they also finance themselves with tax advantage financing using private activity bonds. So for large scale infrastructure projects, there are these innovative ways to finance these heavy CapEx builds. And if you can separate the operations from the assets, you can open up a lot of different avenues for Advantage financing. And when we're looking at Mac Mountain and we're putting it together, on the financing side, we thought, if we set this up from the beginning to be able to really, again, separate the assets and the operations, that will allow us the opportunity to have more attractive financing, both in the near and intermediate and long term. Ultimately, way, way, way down the road, and this has been done before, telecommunication assets are requalifying assets. So anybody that is familiar with real estate investment trust, if you can, that is probably one of the most attractive ways to finance the type of assets that are eligible for that structure, and telecommunication assets are. So if you can set it up at the beginning the right way, you have better financing options. And that's part of the Broadband-as-a-Service, separating the operations, the systems, the people, and from the actual assets that are being financed. On the non-financing side, in my last business, we had acquired 3 different broadband businesses, and we started one from scratch. And after a very short time, we realized, wait a second, we have 4 financing departments. We have 4 different billing systems, 4 different operating systems. We have 4 different customer service departments, 4 different sales departments. We have 4 different network ops. We realized there's a lot of duplication, and that's inefficient. And one thing that is a nice benefit from separating the operations from the assets is that you can really achieve some tremendous scale in your operations. So, for example, if you put all of your people and systems into one part of the business and the operations, those can scale to manage ever increasing larger networks without the same incremental cost in operations. So, for example, the billing system, operating system that we use at our operating business, Lightcraft. So we have Mac Mountain as the holding company. Lightcraft is our wholly owned operating subsidiary, where all of our employees and all of our systems and operations are. We are working with a billing system, operating system that we pay the same amount, whether we have 5,000 subscribers that we're managing or 50,000 subscribers that we're managing. So the costs scale tremendously, and we can increase the number of networks that we can manage for others with the same systems and people without the cost being sort of tied linearly to the growth of the network. So, scale, it benefits both in financing, scale benefits in operations, and setting it up from the beginning like that, we think gives the business a significant advantage over other ways of doing this where you don't have those efficiencies. And so when people talk about, as a service, it's really separating the heavy capital expenditure components of that type of business from the operations, and then being able to get all those benefits that I talked about.
How do you feel the events of 2025, whether that's the financing or funding shifts, the competition, content changes, tech changes, did these reinforce or challenge some of your thesis around the value of broadband as a service? How did that kind of influence y'all's take at Mac Mountain?
Certainly reinforced. I think everyone now is certainly accepting of the probability that a lot less money in government grants is going to actually come out than they thought was going to come out maybe this time a year ago. And I don't actually think that's a bad thing, because it forces a more conservative way of thinking about financing, like I said, this heavy CapEx going forward. And I believe there's a model that can prove that you don't actually need government grants to do as much as people think you need to do. Again, pointing to the actual experience that I've had here in Vermont, you can finance rural builds with existing financing options that are out there. Like I said, tax-free revenue bonds, without needing government grants. And not in every case. And I'm not saying government grants are bad. They're absolutely needed in certain areas. I think it's part of the solution, but I think this year, when you have less money than you thought you had, it forces you to become more efficient. And the way you become more efficient is in scale, like I just discussed, setting the operations in a way where you can add more and more network architecture without incremental cost. So, if you thought you had $100 for a project and now maybe you have 80 or you have 70, you start to learn how to do things more intelligently and do more with less. And that, I think this year, if that was one theme on the financing side, it was that there is significantly less capital coming to different states for these projects than they thought they were going to have. So it's forcing people to be more creative, forcing people to be more efficient. And I think that's a good thing. And I think it's reinforcing this idea that if you can have a business that can provide that solution to municipalities, to rural electric co-ops, to small rural ISPs, and the one that we haven't talked about is one that we really focus on a lot, which is on developers and home builders. You can partner with these different entities and get really great outcomes because you align interests and you find differentiated customer acquisition. I think if that's one critical thing that we focus on at Mac Mountain, it's that we are trying to find areas where the networks we build truly add value. So we don't want to be the third fiber provider in a particular market. Having lived in Boston, there's no shortage of broadband opportunities in major NFL cities. Where there's a shortage is places like where I live. And where there's also a shortage, believe it or not, is in new home construction. And that's a whole another area that I didn't talk about that we sort of pioneered a few years ago, where we started working with home builders and saying, people are frustrated when they buy a new house. They have water, they have power, if they're on natural gas, they have other amenities, but then they have to call somebody to install their internet. And we have some really good partners that are national production home builders. And we worked on a project together where we said, how do we align interests and how do we partner so that we can solve this problem and kind of create a winning scenario for everybody? And that's where we came up with Blueprint Broadband. Blueprint Broadband is our operating subsidiary that focuses exclusively with and on developers and home builders. It's the idea that we work with, and we've been doing this before, actually, with the same personnel in our previous business. But here at Mac Mountain, we're focused 100% on it, and we think it's very exciting because I don't know exactly what the right numbers are. I've seen a lot of different numbers, but let's just argue, for argument's sake, maybe half the country currently has fiber to the home. I think over the next 5 to 10 years, most of the rest of the country will have fiber to the home. And then really after that, the only opportunity will be new home construction. So whether that's 1 million homes a year or more or less, that will be the growth in the industry. And we partner with developers and home builders in new home construction to put fiber into every single house in a new home development, and then partner with the developers and the home builders to share the cash flows from that long-term utility stream of cash. So that's the unique model. And again, that's something that we can do in Oregon, Florida, Texas, Colorado, Nevada, Utah, really anywhere. And as you might imagine, it's something that we do in areas where they're actually building a lot of homes, which they're actually not doing in New England. So in areas where there's not a lot of new home growth, it's more brownfield builds of the type that I described earlier, where you're partnering with municipalities and power companies and rural electric co-ops. Again, that's differentiated customer acquisition because you're partnering with particular groups to go after markets where there's an opportunity and you can really be the best provider of telecom infrastructure in that area, the best broadband provider. And then in new home construction, you can partner with developers and home builders and align interests to really get 100% of those customers. And it's great for everybody. The best overall for the person that buys the brand new house, takes the possession, they walk in there, they use their keys, open the door to their brand new house, and day one, they've got gig speed internet, fiber in their home, and they're delighted. And so again, our end goal is to delight customers and have really happy broadband subscribers everywhere we go. And we think, that can be done in those partnership models.
This has been fantastic. Again, I said we were going to cover wide but thin, which is true. We covered a lot, but only dug this deep. So much more to dig into, and I hope we can bring you back on the podcast soon for more follow-ups. Again, folks, we've been chatting with Alex Rozek. He's founder and CEO of Mac Mountain. If you like what you heard from Alex, you want to tap into more of his thought leadership, find him on LinkedIn, shoot him that email at alex@macmtn.com. Head to their website, check out all the great work they're doing, especially pioneering around broadband-as-a-service models. But folks, that's it for today's episode. If you like what you heard on our end and you want to tap into more thought leadership from us, make sure you're subscribing on Apple Podcasts and Spotify for more of the latest, the minds and the market movers shaping broadband. You can also head to our website, amphenolbroadband.com, for more on our solutions and services, more resources, and of course, more episodes of the show. I'm your host, Daniel Litwin, the voice of B2B. Happy 2025, folks. We'll see you in 26 with more on Wavelengths.